Hey guys, welcome back to my channel. Over the past few months, I have started studying ICT a lot because I started noticing a lot of you guys were asking me to share the ICT concepts with you. So that's why I am making this video for you, because in this video today, I'm going to be sharing mind-blowing ICT strategy that I learned from one of my fellow YouTuber, Garland Trader, and also watched several other videos similar to this one from other YouTubers as well. So I decided to backtest this strategy, and after backtesting over 125 trades, this strategy gave me more than 85% win rate. Now the reason why it gave me over 85%, but it gave Garland 80% win rate, because I decided to tweak few of the things which I'm going to explain to you in this video. So make sure that you stick till the end of this video. And also, I have added my recommended prop firm links in the description with their amazing discount codes. Do not forget to check them from the link in description if you want to take the challenge and pass and become a funded trader this year in 2024. Now let's deep dive into today's video and see this mind-blowing ICT trading strategy that is fully replicable and that is very easy to understand. So for this strategy, I'm only going to be using a 3-minute time frame, and on the 3-minute time frame, the concepts that we're going to be using, they are based on the previous day candle, and we're going to be looking to find the highs and lows of the previous day candle. So we're only going to be using 5 simple rules. One, I just told you, identify the previous day high and low. The second is going to be wait for the liquidity sweep, which I'm going to show you how we're going to be waiting, how we're going to be looking for the liquidity hunt to happen. And then we will wait for the change of character to happen. What does it mean? I will also explain to you in a bit what do I mean by that. Then we will look for the fair value gap. And right after that, we're going to execute the trade. 5 simple rules that you just need to understand. So let's say that is the previous day candle. That's the high of the previous day candle. And that's the low of the previous day candle. Now what we want to see that on the next day, let's say that's a bullish candle and market is going to start from here. Either we want market to come down, go lower than the low of the previous candle, takes out the liquidity and then come back in, or we want market to simply just go up, take out the liquidity from the break of high of the previous candle and then comes back in, which will be the liquidity hunt from the previous day candle high. That's going to be our first and second thing. Third is wait for the change of character. Now what do I mean by that is, let's just say there is the high of the previous day. Okay. Now here market went up, market made a high on the previous day, and then sellers, they started to come down again. Now when sellers were coming down, we want buyers to come back up if we want the liquidity hunt to happen on the high of the previous day candle, which is right here. Now we want buyers to come up and we want buyers to basically go higher than the previous day high, and then right after that comes back, sellers to comes back in, and when they will come back in, wait for the change of character, which I'm going to tell you what is it. So basically market is making a higher high and high low sequence here. That's the higher high, that was the high low. Then we have the higher high here, here we have the high low, then higher high on the miniature level basically, then the high low. However, when there was the liquidity hunt happened, the fake breakout, then right after that there was this displacement, which means a lot of strength came from the sellers, which not only turned this break into a fake breakout, that was the liquidity hunt, and also they made this previous high low and changed the market from high low sequence. Now they have the lower low. When it will happen, that's our let the change of character happen. Then we're going to look for the fair value gap. Now what is a fair value gap? So let's say there were 3 candles during this seller's movement. Now after the liquidity hunt happened and before the change of character, these 3 candles appeared. Now what you see that there is this tail of this previous candle, the very first candle that I drew, then the wick of the third candle, and there is the difference between the low of the wick of previous candle to this high of the wick of the previous candle. So what is it basically? It's a fair value gap, as when this candle appeared, right after that there was a difference, as after this second candle appeared, when third candle happened, the wick was definitely lower and also with a gap than the tail of the first candle. So that's our fair value gap, and I'm going to show you in the live example how it's going to look like. So these are the things that we need. The high of the previous day, we mark the high and low of the previous day, then on the next day we wait for the breakout or the liquidity sweep to happen on either side. Then we wait for the change of character to happen, then we look for the fair value gap, then we take the entry. Now the question is, on the 3-minute time frame, how we're going to find what is the high and low of the candle easily. To do that, just go to indicators and type ICT midnight and choose this one, ICT midnight New York and GMT. by this guy Leak Q. Once you add it, it's gonna look like this. So what you need to do, simply just double click on it and untick show midnight GMT line, and also at the same time make sure that your trading view time is set to New York time. So that way it will show the data in 1 day according to the New York time. So basically the indicator is showing us when the day started and when the New York session ended. So basically with this indicator you can see the each day price action. Now what you see right here is basically this whole day, and during this day, where is the high? The high is right here. And where is the low of the day? The low is right there. So that's the low of the day and that's the high of the day candle. Now what we want to see, we want market to basically come and go higher, very aggressively go higher than the high of the day, and also sellers to come back down aggressively and break the previous high low, in case if market sweeps out the liquidity from the high side. And after that, we're going to look for the fair value gap and then we will place the trade. So as we have our high of the day right here, I'm going to put the horizontal line here, and market is coming on the next day. So let's see how it's going to come. Right now we have the higher high, higher low sequence right here, and on this higher high and higher low sequence, so far we haven't really broke the structure and we just started to break it, and it seems that definitely we went higher than that. Now the new level, the high low level is right here, so that's going to be the area from where the move to the upside is happening. So we want to see whether market is gonna aggressively come down. That means with a lot of momentum, which is going to be displacement in words of ICT. And if there will be enough sellers and we break this structure, then we will look for the fair value gap. Now here what you see, sellers, they definitely came down, but look at the momentum, they're not really strong. Not only that, buyers, they are going up. So far we have this high low and we have this higher high, and that's above the high of the previous day, and there is no change of character yet. So let's wait and see if it happened, and I won't really consider that a change of character because our higher low is still there, as this is not the high low because there was no higher high. So some of you may fell into this, that okay, change of character just happened. Now if it happened, where is the fair value gap? We don't really see any fair value gap when basically market broke this higher low sequence, and we want to have a fair value gap. Now how do I know there is no fair value gap? Because of the reason, when market broke it, which is right there, you can see there is definitely no fair value gap, and also the sellers, the way they came, they are not really that strong. So we want strong sellers to come. So let's wait, and I always recommend, the reason why I said I was able to get over 85% of the win ratio is because I was able to tweak few of the things which are like this. Now what I'm going to do, I'm going to wait to see a proper change of character, and as so far it did not really happen, as there is no fair value gap. So what I'm going to do, I'm just going to wait until market tries to break it again to maybe liquidate a lot of positions of the traders who are placing the sell, and we can only know if they liquidated enough position if there are going to be enough displacement during the sellers movement. So that's basically the movement that I was referring to, strong buyers movement. And let's see if sellers come. If sellers come, we need them to basically change this character, which was the higher low before they created this higher high, and that has started to happen. So now we're in action. As it just happened, we just need to identify where is the fair value gap. Now let's have a look at candle by candle. So now here what you see, this was the low of this candle, and after that there is this fair value gap right here, as there is a candle in between that. So we can identify that fair value gap, and I just want you to put your trade sell orders right here at the low of the fair value gap if you want to take the sell. Put the buy position or buy limit at the high of the fair value gap if you want to take the buy. And most importantly, I don't want you to put your stops here, because this liquidity sweep happened. The mistake that most of the traders make, they put too much tight stops, but I recommend always place the stops above the previous liquidity sweep that happened. So that way, basically, even if buyers will try to come up again, your stops will not be hunted, as we want to make sure that you give enough space to your trade so that it can breathe. And also your trade profit is going to be at the low of the previous day, which was right here. So I'm going to put a line here as well, the horizontal line, and that's the trade with more than 5.43 risk reward ratio. So let's see how it's going to play out. Trade just got executed, and sellers, they already have started to make a movement to the downside. And here you go. Take profit just hit. That's simple, fully replicable, mechanical ICT trading strategy that I learned from my fellow YouTubers, and I literally back tested it for more than 125 trades with an average of 85% win rate. Incredible, isn't it? If you're looking to pass the Profam challenge, you can simply just use this simple mind-blowing ICT trading strategy, and you can pass your evaluation and become a funded trader. Let me know in the comment section what you think about this ICT trading strategy, and also if you want me to make more videos like this, do let me know in the comment section. I will see you in the next video, guys. Thank you so much for watching until the end. Bye for now.